So we had yet another day in the markets and another day of Tesla stock doing this. In fact, we had this article come out stating that Tesla is no longer one of the top 10 largest United States companies for the first time in 13 months. But look guys, this is something I mentioned previously about being patient for Tesla. I remember back in January 25th of this year when Tesla hit $180 per share, everyone was saying, oh, this is the absolute bottom for Tesla. Tesla's gonna go up here. And I said, no. I want to wait for confirmation before I deploy my capital, right? I want to see strength above, $204. I want to see that close above that area before I put some more capital into Tesla. And I know there's always individuals, I get emails, I get DMs, I get comments of individuals saying, look, if you're doing a long-term investment for Tesla or any stock, it doesn't matter about timing in the market. It's all about time in the market. And that's absolutely correct, right? It's not about timing in the market, it's about time in the market. But one thing you have to understand is that you have to be strategic and prudent with how you deploy your capital. And so just because something is down, it doesn't mean that it can't go further down. A lot of people say, oh, well, this is a sale, this is a time to buy, and then things fall down lower. It's kind of like the inverse of when things hit an all-time high, everyone's like, oh, well, this is a top, it can't continue going up. And then we end up seeing the stock continue going up. One example of this is Nvidia, which actually made another new all-time high back when, people for the last couple of weeks have been saying, oh, well, this is a top, it's gonna fall down. And so one thing I want to remind everyone is that you should only trade or invest in whatever you see value in. You should never follow what anyone on X says or anyone on YouTube or, someone from your barbershop, wherever you get your information about the markets or whatever you do, right? You should do your own due diligence and do whatever you see value in. And one of the things I said is, look, I don't like Tesla here and I want to be patient. And I'm very glad that I was. In fact, last night I shared this community post saying how, look, I haven't posted a video in the week, but for those wondering, I haven't done anything special for Tesla in my long-term or short-term trading account. I've been waiting for Tesla to do one or two things before I add another lump sum in. Either break above $204 for confirmation of an uptrend and showing that strength, or fall lower to $165, and we've yet to see either happen. And so that's why I've been pretty much just watching Tesla, observing what's going on, but deploying my capital in my long-term account and in my short-term account in separate areas. There's been a ton of other opportunities out there. For example, just last Sunday in the daily briefing, I talked about how we're concurrently seeing the rise in gold and Bitcoin to these high noteworthy levels, reflecting this broader trend of hedging against market volatility. In fact, if we take a look at this ticker symbol GLD, which is an ETF for gold, we see it pretty much aggressively pushing upwards. In fact, last night in the daily briefing yesterday, I also talked about gold and Bitcoin, which, by the way, if you guys want to have access to my daily briefings where every single day the markets are open, I provide an outlook of what trade ideas I like and what's going on in the overall economy, make sure to check out the first link in the description below. Now, for those wondering why we're seeing a lot of volatility in the market, well, we have a lot of economic data that has recently come out, and a lot of market participants were waiting for this data. In fact, we had the ADP employment numbers, we had the job openings, aka also known as the JOLTS, we had the Federal Reserve Beige Book, and then also at 10 a.m. today, we had Fed Chairman Jerome Powell, the Federal Reserve, testify in Congress. And so a lot of individuals might say, well, why does this matter? Well, here's the thing. The markets have been really watching and trying to listen to what Fed Chairman Jerome Powell says, because everyone is trying to understand, when do we get these rate cuts, right? Everyone's trying to see, when do we see the Federal Reserve cut down on the federal funds rate? Because of course, once the federal funds rate comes down, well, that's a bit optimistic for the markets. Now today, we had the news, right, that Fed Chairman Jerome Powell didn't commit to a timetable for interest rate cuts at all. In fact, he said that, it may be later on in the year. And so that was a bit of bad news for the markets. But at the same time, he also had a bit of optimism and positivity, stating that things are trending in the right direction. And so that's something that provided a little bit more clarity for the markets. And so I'll go ahead and touch on that for those within the Push and Profit private group later tonight. But I also want to talk about something else. Now, recently, we've been seeing a lot of analysts and a lot of outlets say that they're not really optimistic on Tesla or Apple, and there's a lot of negative news. In fact, this headline says they are not all magnificent. Wall Street veteran points out 2 vulnerable Magnificent 7 stocks. Now, one thing I find a bit amusing is that for those within the Push and Profit private group, I stated about Apple being dead money back in April of 2023. So a lot of these market pundits, they're late to the party, right? They're extremely late. Now they're saying, oh, well, Apple doesn't look that promising. Apple doesn't look good. And I shared how unless Apple really delves into AI and comes up with a product that they could have a monthly subscription for, Apple is not looking too healthy. Now, in this article, it says that many companies with significant exposure to China are coming to realize that the Chinese economy may be experiencing a slowdown in consumer purchasing patterns are not what they used to be. And it goes on to say that specifically Apple, which derives 20% of its revenue from China, experienced a 24% drop in its iPhone sales within this country for this year alone. Now, this article talks more about Apple, but it's also the same thing with Tesla. Tesla has some exposure to China, and one thing we have to understand is that things are not looking very well for China, especially in EVs. We're seeing a little bit of a slowdown with EVs in China. We're seeing a lot of the Chinese EV companies or the hybrid cars trying to kind of export their cars as well. They're looking for other countries to really export their production, and that's because, again, things are not looking that well for China. And so I want to go ahead and hop into my laptop, take a look at Tesla stock and also the broader market, some things that we should be paying attention to moving forward. And I want to look at things from a technical perspective as well. As I often do, I say that, look, you want to pay attention to the fundamentals, the macroeconomic environment, monetary policy, fiscal policy, catalysts. I mean, you want to use everything and synthesize it together. And so I want to hop into my laptop, point out a couple of things, but before we do so, just a friendly reminder that if you have not done so already, consider tapping that subscribe button so that you don't miss out on any future upload. And while you're at it, also make sure to check out this additional link in the description below, which is a link to join the Push and Profit weekly newsletter, where every single week, on Sunday, I send out an email talking about what we should be aware of as market participants. And again, guys, it's completely free, so there's no reason why you shouldn't join. So definitely check out that resource in the description below as well. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and I want to highlight a few points that are very crucial to consider, especially where we're currently at. So one of the things I often state on my public videos here on YouTube and also on those private videos within the Push and Profit private group is that I like looking at the volume profile, right? This is this on the right hand side. Not all brokerages carry this, which most people are familiar with volume relative to time. But when you look at volume relative to price, it tells a very interesting story. And right now what we see is that we're slightly below one of the areas where there's a lot of volume relative to price for Tesla. And so if we fall below this shelf, well, that means that there's little exchange between the buyers and the sellers, and just a little bit of selling pressure can drastically bring Tesla stock downwards. And that's a bit concerning. I mean, we've had a lot of recent negative catalyst news for Tesla. Of course, a lot of individuals are frustrated with Elon Musk constantly just making jokes on X.com. People are feeling like he's not being serious with Tesla. And so we're very much at this area that it's a bit concerning. Of course, the inverse can happen if there's buying pressure, and so if there is, then we once again remain in this area where there's consolidation. And so that's where we've been at for a while. We've just been consolidating for a bit, and that's why there hasn't been any real moves with Tesla, right? I mean, I've highlighted so many trade ideas within the Push and Profit private group, and NVIDIA was one of them we talked about. One of them that I haven't mentioned publicly on YouTube, but I've mentioned it quite a bit often within the Push and Profit private group, was just a slower trade idea with TLT. I'm not going to go ahead and break into why this was a swing trade idea. Again, I want to kind of keep that exclusive for those within the Push and Profit private group. But we're seeing bonds do very well, and that's especially because we're seeing the treasury yields for bonds start to fall down a bit. But again, I won't delve too much on that. That's not really relevant to Tesla. But what we are seeing is overall market structure is still pretty strong, and that's because we're seeing the 10-year treasury yields go down. In fact, if we take a look at SPY, yes, we had a red day, and we do have a red candle here, but one thing I want us to understand, right? We see this red candle over here, but that doesn't necessarily mean that things are actually down. In fact, we closed higher than the day prior, right? That just means that, look, we opened, and at one point we fell down, and we're slightly below where we opened. But if we look at it from a day-over-day perspective, we're still higher. And so that's something I like to point out, because sometimes when people look at the chart, they see a red candle and they freak out. And it's like, no, well, we have to kind of understand the dynamic of a candle, right? It's showing the opening and the close. And so we're seeing market structure not yet broken. Of course, there is some caution that we're going to want to consistently watch. As I said, there is still a lot of volatility in the markets, and we'll go ahead and touch on that moving forward. But I want us to take a look at the sectors, right? So I often like looking at market breadth. Consumer discretionaries going down, right? That's not good for Tesla. We know Tesla is a consumer discretionary. It falls into that. And while it was pushing up, it was good for Tesla, but as it's pushing down, it's bad. And the reason why I like looking at sectors is because oftentimes when the overall sector is moving in one direction, we see the overall or pretty much a majority of the individual stocks within that sector move along with that. And so a while ago, I think my last public video before I took a week off, again still dealing with pain from the accident, but I talked about how Tesla was pushing up, and I was excited. I was ready to deploy capital, right? And then it didn't close above that area. Tesla actually just continued falling down. And so going back to the sectors, let's go ahead and take a look at that. I don't want to go too off tangent, but we're seeing consumer discretionaries not do well. Finance sector, right? The financial sector is holding up. That's good. Okay, so we see that holding up. We're seeing tech, again, a red candle, but if we look at it, still closed higher than the day prior. So we're seeing tech hold up pretty well. We're seeing healthcare, again, also hold up pretty well. So market breadth is there, right? And in fact, if we take a look at the S&P 500 equally weighted, that's pushing up as well, right? That's something that you have to watch out for or pay attention to, because if you just look at the S&P 500, it has a huge weighting from a lot of the big names like Apple, Microsoft, Meta, right? But when you look at the market breadth and you see that breadth is still showing strength in holding up, well, that shows us that there is potential for the market to hold up, because of course if we see the majority of the other stocks within the index fall down, well, that's not too good of a sign to see. So going back to Tesla, right? And actually, before we actually go back to Tesla, I want to highlight some of the things coming up, right? So it's still a week of volatility. Tomorrow, we're going to have the initial jobless claims that comes out weekly. We also have Fed chairman, again, testify to Congress. Consumer credit, that's something that we're going to want to watch out for. I mean, this is a heavy data-intensive week. And then guess what? Friday, we have the government job numbers, right? Non-farm payroll, unemployment rate. These are things that we are going to want to watch, and they're going to have a big sway in the markets. Oftentimes, you see individuals say, oh, well, the macroeconomics, that data doesn't matter, right? And those are often individuals who all they care about is the charts and drawing squiggly lines. And again, the market doesn't adhere to whatever squiggly lines that you draw on the chart, right? You have to kind of have a deeper understanding. And that's why I try to provide this content. I try to demystify the markets and provide a deeper understanding. It's not just about, a support or a resistance level. It's actually understanding the business, right? The fundamentals, understanding where we are in the business cycle. People tend to forget about things like that. But going back to Tesla, right? So one thing that I've been saying is, look, this 165 area, right? And let's kind of zoom in a bit over here. And I may have gotten that mistaken. It may be on the weekly chart where I see that. Let's go ahead and actually go to the daily chart. I'm trying to look for that gap. It was around over here. I guess it was, I might have been mistaken. It might have been 150. So we'll continue to look into that. But essentially what I've been saying is, look, there's this gap over here. And it's likely that if we see some selling pressure, we could see Tesla fill that gap. And once it fills that gap, I don't necessarily want to just buy in just yet. Again, it's still the same idea of waiting for confirmation. And so I'll update once we hit that area. Again, I thought it was 165. I might have mistakenly spoken, or I said that incorrectly. I'm all messed up, right? These painkillers for this accident. But anyways, the point is, we're seeing Tesla fall down. Lots of bad catalysts for Tesla. And we'll have to continue updating where we're currently at. I'll continue to provide my updates on Tesla and also continue making my updates for those within the Push and Profit private group. Again, we've been dead on, right? We talked about bonds. We talked about how I shared gold pushing up. And, oftentimes I get comments. Sometimes I get comments in the comment section saying, oh,
I don't believe that you said this to the Push and Profit private group, right? It's not public. You're hiding or you're making lies. And look, I don't really care what anyone believes or not. I'm not here for the credit. For those within the Push and Profit private group, they see what I write. They have access to daily videos, so they could see the trade ideas that I call out. Again, it's not about taking the credit. It's more about just providing the value. And again, if you want to have insights into what I'm looking at in the markets, first link in the description down below. But you guys let me know in the comment section down below, what are your thoughts on Tesla, right? I talk about Tesla from a long-term perspective, also a short-term trading account perspective, and I'm just not touching it. Not a big fan of Tesla. I may actually short Tesla once if we end up breaking below 172. So that might be something that I'll look into for the short term. But with that said, I'll end this video here. There's no need to make it any much more longer than it needs to be. And with that said, I need to get some rest, and I'll say, but before I do so, before you guys go, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.